Hi there, traders. This is Brad Gilbert with the Daily Market Insight for Friday, the 14th of April. Okay, now I think we can clearly say the US dollar has left the building. All right, you've got oil moving higher, dollar index lower, euro, gold still heading topside with Bitcoin. This is Bitcoin's the sort of new safe haven trade, really following gold. And you look at the equity markets as well, a sigh of relief as we really come to the end of the Fed hiking cycle. Now, I was saying this yesterday, we're looking for, like, this inflation numbers give us a great idea of what's happening, what the Fed's going to do. And we're just looking for that last straw to break the camel's back. Now, US PPI numbers came in weak. And if you look at the year-on-year numbers, they were pretty much close to expectations. But look how quickly they are falling, right? And the devil's in the detail. Today, I think we've got a great opportunity to really get into a sort of more medium to longer term trading opportunity. Okay, just the retail sales figures. Let's see how these numbers drop. You got industrial production numbers there as well. Keep an eye on that. But these numbers are tier 2 numbers, right? They're not like explosive like the non-farm payrolls or CPI. They're going to be slow feeders, or a slow drip, I was going to say. But just keep an eye on this, because if these numbers are extremely weak, you know what? The Fed is done, and they are going to be very nervous about the downside. Now, what I'm talking about is it's the devil in the detail, right? Now, I'm going to start talking about longer term opportunities here, but just come across here and have a look at the what we're sort of looking at. So if you're looking at news services, right, Wall Street, let me just move that down a bit higher. Wall Street rallies to higher closes. Inflation data feeds Fed pause hopes. Okay, that's sort of the headline, and everyone's sort of talking about what's going to happen. But really, the devil's in the detail. If you come over here to look at the macro side of things, okay, you start to look at the detail here. US labor market gradually losing steam, producer inflation cooling. The numbers, a record number of Americans are now filing for unemployment benefits. Okay, and this is going to escalate. And this is something that the Fed has once again letting that inflation fly out. Now, just putting their foot on economic growth has really sort of kiboshed things. And if you have a look down here, I'm just having a look through a few articles. Small US banks and businesses make for big problem. Okay, this is apparently the heart and soul of the US economy. And if you go into some of these stories, the data is really bad. Okay, you're starting to see deposits, and this sort of relates to the banking issue we had, a month ago. Okay, deposits have fled small banks at a record pace. Availability of credit for small businesses is deteriorating rapidly, right? So what that means is they're not going to hire workers. They're not going to expand. It's like batten down the hatches. We need to survive the next sort of big calamity, right? And that's what we've got ourselves into. There's so much money in the economy now. We're seeing, we should start to see unemployment blow out next month. And this really sets us up for a longer term move, right? So you've got to start planning this. Now, if you're just looking at the normal markets and we're looking for a risk on day, you see US equities up and you see Euro, Sterling, Aussie fly the top side, dollar go lower. Yeah, that's all well and good, but that's just like sort of normal market conditions. We are now hitting a phase where there's a shift. And I'm talking about a fundamental shift where the US economy now is teetering and it's actually on the verge of just sliding down the escarpment. So when it comes to your charts, you need to, like, if you're just looking at charts like this, you can see, okay, dollar index is lower. These things are going up. And if I actually even come over to the currency pages, you can see it a little bit clearer with the dollar. Obviously, the dollar falling against euros, sterling, Aussie, and you got Kiwi now screaming topside. All the dollar pairs heading lower. Dollar yen even catching up, and with oil rallying and the dollar falling, you got a double whammy here on dollar CAD. Now that's all great, right? But now you need to come in and start preparing for a bigger move. Now, once again, you've got the daily charts here, right? These are all daily charts, but I want to go a bit deeper than that. And you start to come in and have a look through the individual pairs on different time frames. You can start to get a bit of an image, right? The dollar index breaking down here through 101.60. I really like the price action there around the trend line. Confirms everyone's looking at it and where are we going? Well, you look at the daily chart, right? And you've got a couple of 100 points to go here on the dollar index before it hits the next trend line. And then after that, it's free fall down towards that 92 and a half. And you can see it just breaking down here on the weeklies as well. But you know what? What you need to be doing is going through your charts and looking through all the various pairs to find the right instrument to trade. Now, the dollar yen, I mean, it's between a dollar trade and a safe haven trade. That can often get tricky, but you can see it's just sort of trading sideways at the moment, nothing to really jump up and down about. But if we go through some of these pairs, now you get a better idea. Of course, you're seeing dollar CAD move down, but look at the next support line. It's bloody a long way away. I was about to say 3 or 4 big figures away, but it's 133.40. You're looking at 131, a couple hundred points before we hit the next level. That could easily fall down there. And this is what I'm talking about. Today's US retail sales figures could really give us the answer. Dollar Swiss, I mean, it's always tricky. I'd trade dollar Swiss by looking at by looking at the euro. If euro goes up, dollar Swiss goes down. Just be aware the Swiss National Bank made a mess of it in 2015. So a lot of traders don't really get involved or trust it. Now, on the hourlies, you can see this clean break. Okay, after the US CPI numbers, we had that stop loss run, tested the downside, sort of started to drift lower, but yesterday's PPI numbers and even slightly stronger industrial production numbers out of Europe helped it go up. But looked at the outlook here for the euro, up towards 117, right? This is big. We're starting to get into some levels here where there's nothing to stop these instruments except a big shift in the data. And we're not seeing that shift yet. So sterling also heading topside. It's just starting to break. It's got a lot of room on the top side, I should say. Once again, you may be looking for a weekly trend line to break before you get involved. I'd suggest probably earlier than that. And if I just keep flicking through, you'll start to see where the opportunities are. Now, Aussie, yeah, on the hourlies, looks like it's broken higher. There's a bit of a double top here around 68, and it could head up towards sort of 70.5. And if you come over here, Kiwi, like I just want to give you a good look here across the board. The Kiwi, well, it's still in the middle of the range, right? That economy's really messed up. So I think they're going to be cutting rates sooner than later anyway. Oil, well, once again, we've got that gap, right? I love it when retail traders ask me, yeah, there's a gap. So I get short and I look for the gap to be filled. There's no time frame for gaps to be filled, right? It will at some stage. But look at the top side here in oil. There's nothing to stop it going up towards, over $100 a barrel, right? At this point, especially if the dollar continues to fall. Then you come into the equity markets, right? And we are getting close towards big breaks here. Okay, you can start to see the Dow Jones Mini there. Just up above 34, where you can start to look to get in. Like I can see the equity markets really flying topside right now that everything's on the table. Okay, CPI, etc. Now we've got a level here. It's almost ready to pop topside again. The S&P Mini, you can see here as well. There's like a lot of room topside. And if I come back over here, NASDAQ, well, NASDAQ's sort of took the brunt of the tech companies. But it is trending higher. I mean, you can clearly see that. There's no levels to really get in, but you know what? There's a couple of thousand points there topside as well. So that's going to be an easy move. Now, looking at the safe havens, this is actually something that you should be thinking of in amongst everything else. Now, gold, obviously with the banking crisis and, tricky central bank situations, et cetera, so forth, it has been screaming topside. But to me, at some stage, this has to be rolled out. Or if the US economy starts to nosedive, it could continue higher. But at some stage, gold will come down when the safe haven trade is over. So keep monitoring this. I think it's an easy break trade to the downside that will come into play at some point. Is it now? I don't know, but worth keeping an eye on. And those crypto traders, well, same thing as gold. People are parking their cash in cryptos at the moment. Makes a lot of sense. The banking crisis, uncertainty in the global markets. The only thing is, when it falls, it falls like a lead balloon. So I've just got some fibos here on the daily chart to give you a bit of an idea. But you know what? It's there's not as much rhyme or reason with it. But now it's attached to the safe haven trade. You can start to sort of piece it together. I would suggest if gold falls, Bitcoin falls as well, and the rest of the cryptos as well. So to me, you've got to start thinking like, okay, the dollar is going to start nosediving, right? And now you need to get some structure around a medium to longer term trade plan. Now, I know, to me, I always close positions out before the weekend. So you can still have a long-term trade, right? If you're looking to get in here, you just close the trade out Friday and open the same trade up on Monday. There's so much external risk, event risk over the weekends. We could get some brash comments from a Fed official, and some of these instruments could open up 200 or 300 points either side of where they are. So there's no need to run the risk over the weekend. You know what? If there is comments and it is lower, well, you may get in at a better level. But start to make some plans around the longer term trading opportunities, because they are on the table. Euro sterling in particular. Sterling's been one that has just been battling away, but it is so close to really breaking out that, you know, we've got this sort of level here where it's just above it at the moment, just holding on. We are looking for something to push it higher. Then they've got the last trend line, resistance trend line up around 127.5, and then it's topside, right? So things start to improve a bit, right? Well, then we're going to start to see some of these instruments really run to the top side. So you need to adjust your plans to factor in bigger opportunities. And that's where the cash is, right? Short-term trading opportunities right now, yeah, there's a few, but there's bigger opportunities. And the best thing about having a medium to long-term trade plan in play is you get to make small amounts of cash sort of every day, because this trend may last for the next couple of months, right? So if you get a small trade in play and you get the first 200 points right, well, you're in play. So you need to have a big stop loss to get in, and then you can sort of see how it plays out. And this is where today's numbers really come into play, right? Not only do we have technical levels, this retail sales numbers and industrial production numbers could be the entry level that we're looking for, okay? University of Michigan consumer sentiment numbers there as well. So just have a look at that, because it's, as I said, this is really crunch time. The Fed will be watching these numbers extremely closely. Huge weakness. We're going to see that May hike rolled back out, and we'll start to see the shift in the tone and the sentiment from the central bank. And that's really, you want to be in the trade before they start saying that. And that's where we are. All right. So plenty to look for. A little bit of a shift in the market from short term to medium term now, because we are looking for a bigger move to the downside for the dollar. These retail sales figures will really confirm it, and keep a very close eye on it if you are trading. All right, guys, good luck. Hopefully that's not too long-winded. I want to try and make these as short as possible, but you know what? There's a lot of detail to go into today, because things are building. We're starting to see the move. It's either get on or sit back and pull your hair out as you watch these things slide. All right, have a good one. Cheerio.